Hello, welcome to the January 22nd Humble Investor Bull Bear Market Report. My name is Adam Straseske. If you want to grow your 401k, your IRA, your stock account, I can help you. Gotta let me know. Here's some important disclaimers for you. And as normal, here's our agenda. We're going to go over the broad market readings. And then we're going to go over this week's operating plan. The indexes we like, any closed indexes, which are none, and some possible indexes. First thing first, are we in a bull or bear market territory? Another way to say that is risk on or risk off. We are risk on. The S&P 500 and the MSCI All World ex-USA Index are greatly outpacing Treasuries, represented by this red dotted line down here. Until we get below here, we're still in risk on stance. Looks like S&P and the MSCI All World right neck and neck right now, but the way they closed last month, All World is ahead, and so that's why we're focusing on international markets. We look at the context of the correction risk in the market. It's mixed. The more I start to look at this stuff, the more I start to look at these oscillators, and really for a long time, frankly, the more we need to pay attention to price action. Price is king. At the end of the day, it doesn't matter what an oscillator is telling you. There's always a bull and a bear case, and frankly, that goes with price action as well. As far as the oscillator for correction risk, we've got really two things going here on the longer term one. Number one, we have what's called a positive reversal, where price of the low is higher and the oscillator is lower. And then we've also got a negative divergence, where price is increased and the oscillator has decreased. So it's a really mixed signal. And frankly, the shorter term is not giving you too much. It's just telling you that prices are in line. So overall, we're getting a mixed signal on the as far as breadth goes in the market. If it does continue higher, then we are going to want to definitely see a pop right here on this oscillator above there and continue higher with price. The current stage of the S&P 500, we have broken out of this broad bull market, or broad bull channel, and don't know if it will continue, but you can see from this last week of price action, we had a little bit of selling, and the bulls just stepped right back in and picked prices back up. So, we could be getting close to the end here when you see this tight of a channel. Some sort of correction, at least another broader bull channel. But right now the bulls are in control, and every time there's any kind of selling, they step in and bid the market higher. As far as the operating plan goes, we still like preferreds and the MSCI All World, and then here are all of our weekly swings. Nothing for scalps. There's only a couple of markets, frankly, that are set up for scalps, but overall the market is not a scalping market for the way that we handle those transactions. So the All World up over 1%. Nice week for the MSCI All World Index, and up over 1%. Still below this channel line. Looks really good. We're bullish on it until greater than a 50% retracement. It either underperforms the S&P 500 on that 12-month rolling basis or starts to underperform Treasuries. All of which, except for the relative strength or the absolute strength against the S&P 500, are pretty far off. Canada, flat week for Canada. Just steady right there, still at the top of the channel. If we can get a pop up here, we'll probably look at taking some profits. We've already adjusted the stop up a couple of times. But overall, still looks good for Canada. UK up 0.3% for the week. Nice tight bull channel here. Nice breakout. What we would expect is this some sort of pullback in here, and then a broader channel, and then hopefully higher prices ahead. We have adjusted our stop up here, and so we still like UK, and frankly the action on it is pretty bullish. Japan up over 1% as well. Looks really good. We probably could take some profits right here, but we're not quite ready to take some, and we've got to stop in right here on Japan. We've adjusted this one up obviously a few times as well. Oil down 1.54% for the week. This is the first sell signal that we've had in the, looks like, the past 5 weeks. So it doesn't look, that's not necessarily bad for oil, but this is a sell signal. It's a warning. The trigger would be a price action below this bar right here. So we'll see how this week plays out. But we still have our stop way down here below the trading range, and what we want to see is we want to see prices hold above this breakout level, and frankly we want to see them hold above here in another bull bar, but you know, any pullback just could be a bull flag. So we'll see how that plays out. U.S. Treasuries, the weakest index that we have here, so by far. Look how we're down in that bottom third of the channel. It was a bear breakout. Doesn't look good for Treasuries at all. We've got a lower high right here in the larger context of it, so you know, it doesn't look good for it. If we can get a bull bar, that would be the first buy signal. If we can get a higher price above that, that'd be the trigger. We'll see if we can get that this week. If we get it, then we'll consider the following week and get more involved with it. But right now, it just doesn't look good for Treasuries. Australia, flat week for Australia, and you know, it looks similar to Canada. We had a breakout, and we're pausing right here. And this could be just a bull flag, a sideways bull flag. Neutral week for it. Second purchase range down here. Initial stop way down below. Brazil, the best performing index by over 1%, up 2.83%. Look how this thing just took off. We've got 4 weeks of bullish price action. Looks really good for it. And we've got a second purchase range down in here and an initial stop down in here. But really like Brazil. If it can just continue the way that it's going, this could be a really good one. So I like the action on Brazil right here. As far as this week, we want to continue to build in the all world, and then no new weekly swings. You know, like I've said in the past, we have some cash, but any swing that we get down below, close to our second purchase price, we will eat a lot of that cash up really quick because we'll be able to purchase a larger amount with not as much risk. So no new weekly swings, and like I was saying about for the weekly scalps, it's just really, frankly, it's just not a scalping market for the way that we're doing it. And with that, you have a great week, and we'll talk to you next time.